Morning, everyone. Can you hear me? The lights are blinding. So, small story. Always like to start with a story here, right? And this is me on the right side. I know it doesn't look like me, but just believe it's me. Yeah? I was younger, I had a head of hair, and I was fairer as well. This is about 8 years ago. On the left side is my friend Kareem. Let's give him a name, Kareem. It's a good name as any. And he called me because I teach finance. I'm an entrepreneur. And I said, Binod, I've got this company I want to invest in, right? And since you know finance, can you help me analyze the numbers? It's a good story, right? Because I said, yeah, fine, I'll help you analyze the numbers. So he showed me the financial statements. Okay? It looks like this. What do you notice here? Well, the numbers are circled in red, right? Revenue, 1.1 billion. Profit for the period, 1.142 billion. I know the numbers very well, by the way. Yeah. Is that a lot of money? Yes? Yes or no? Come on, guys. It is. It's more than my pay packet, so 1.142 billion is a big amount of money, right? Would you invest in the company? Yes or no? Yes, you would. I'm not hearing many voices. Come on, guys. Yes or no? Yes. Profits are good. Yes? The number is sexy. Gina said I should be sexy with numbers, so I'm trying to show you a sexy number here. And it is sexy. 1.142 billion is a hell of a lot of money. But what's missing here? What should I be asking? The one question I asked, which he didn't bother asking, was how much cash did the company make? How much cash do you think the company made in the same period? This, by the way, was for 2009, first 6 months of 2009. How much do you think? $1 billion, $500 million, $5 billion? Come on. How much cash from operations? How much? Sorry? 200,000. Oh, that's too low. Okay. So, it lost 246 million dirhams. This is not confidential information. I'm not going to get deported from the UAE. Okay? I'm going to be here for the entire while, today at least. So what are we talking about? We're saying the profit is 1.142 billion. The cash flow is 246 million. What's happening here? What's happening here is a little of magic, a little bit of accounting standards, a little bit of, I won't say illegal stuff. Nothing illegal here. It has been audited. Okay? I shouldn't be saying that. It's not illegal at all. Everyone does it. So you have a company making profits, huge amount of profits, the same company, the same period, making bleeding money, literally bleeding money, $250 million dirhams every half year. Okay? Why is this happening? Well, I'm going to show you or talk you through a few important concepts. Okay? I'm not trying to make you into accountant, don't worry. Okay? I'm going to talk about debits and credits and bore the hell out of you. Okay? But I need to talk about something called accrual and cash. Cash is when you show your revenue in terms of cash inflows, and your expenses are based on cash outflows. It's fantastic. You know, this is what your grocer, the guy who sells Coke and bananas and other stuff in your street corner, he follows this. He doesn't give a damn about international financial reporting standards or US GAAP or UK GAAP or Alaskan GAAP, pretty much. He just says, you know what, I sold so much, this is my revenue, and I got the cash. I spent so much, and that's my expense. The difference is my profit. In other words, entire profit is in cash. Fantastic. So why the hell do we not do that? Because some Italian guy, I think, called Luca Pacioli, if my memory serves me right, in the 17th century said, no, we must follow something called accrual, in Italian accent. This is my fake Italian accent, okay? And he said, you know what, revenue should be accounted when earned, not when cash is received. An expense should be accounted when incurred, not when cash is paid. Everything changed completely. Suddenly, we're looking at a different number completely. In other words, I can have a profit, which is 1.142 billion, yes, but I will have cash flows which is above or below, like Aldar's case. Well, there's a good reason why it is there. It's not just gobbledygook. It's not fraud. It's because you have to show accurate and timely reports. So you need to do that. So cash and accrual. But you know what? Most companies follow accrual basis. You should be following accrual basis. You must be following accrual basis. You don't know it, but you are. Okay? You're all accrual guys, yeah? So, what is the issue here? Well, let's go back to financial statements. Income statement, balance sheet, cash flow. Forget balance sheet. I'm going to talk about the first and the last. Income statement and cash flow. Okay? What is the income statement? It shows you performance. Someone comes to you and says, what is the performance of your company for the last half year, last quarter? What do you say? Look at my income statement. Look at my incomes, my revenues, look at my expenses. These are not necessarily in cash. It's a mix of cash and non-cash. And this is the critical thing you must understand. It's a blend of cash and non-cash. So when I say, for example, that I have profit of 1.142 billion, I don't mean to say I have made cash of 1.142 billion. I just mean to say that what? My revenue exceeds my cost by 1.142 billion. Extremely important point, right? Is it paper profits, like Aditya said before me? Yes, it is paper profits. Can you fudge it? You can't fudge it. That's how accounting scandals happen. Can you inflate it? Yes. I was CFO of a company. I didn't do this stuff. Don't look at me that way, okay? But I know how to do it. I know exactly how to turn the buttons on and off. And people do it all the time, especially public companies. That's your income statement. That's your profit, by the way, okay? But I want to talk about, look at the number here. So revenue for Aldar was 1.1 billion. Profit is 1.142 billion. How is that possible? You made more profit than your revenue? That's a red flag right there, right? How can you make more profit than your revenue? Because your profit should be what? Revenue minus expenses. So what Aldar did, by the way, you see this item here? Fair value gain on investment properties. They simply took the property given to them and just simply revalued it. And boom, and presto, at the flick of a button, your profits went up by 1.2 billion. Okay, this is how we do it. Okay? That's why CFOs are paid hell a lot of money. This kind of stuff. Yeah? Right. Forget profits now for the time being. Let's focus on cash. Cash is important, right? Okay? Now, cash is liquidity. And I wanted to think about just one item. Forget investing cash flows and financing cash flows. Think about operating cash flows. This is where you make your money from operations. When you get money from customers, it goes in here. When you pay your rent, it goes there. Salaries goes there. Taxes goes there. Okay? The other stuff is when you invest your money in plant and machinery, and other stuff is how you raise money from banks and share capital. But this is where Aldar was having minus 246 million. In other words, I hate to use this word, this is cash profit. You know? I should not use the words cash and profit. I'm going to contradict myself soon, are different concepts. But this is cash profit. It tells you the true measure of how much money you made in that period. Not your profit and loss account, not your P&L statement. Okay? So, what is liquidity telling you about? Look at Aldar. Again, I go back to the example, very well known. How much money did it lose? It lost 250 million dirhams. Where do you think the money was plugged in from? Where do you think the cash came in to plug the gap? From where? From financing activities. 11.9 billion dirhams of loans to plug the gap. How long do you think a company can survive by plugging a gap like this? How long? Can an SME survive for long? I don't think so. Did Aldar survive? Yes. Why did Aldar survive? Because it had a big fairy godmother called the Abu Dhabi government. You, ladies and gentlemen, don't have a fairy godmother or fairy godfather. You don't have a bank that will finance you. No one's going to give you money. Your friends and family relatives are sick and tired of you. No cash coming in. Okay? You don't have that. So Aldar simply went to Abu Dhabi government and raised about 12 billion dirhams in money, and all was sorted out and all was forgiven. You can't do that. So cash flows are important. Okay? So very important slide here. Cash versus profit. Right? Cash is not profit, and profit not cash. You need both, right? You have to be profitable and you have to make cash, right? It's dangerous to confuse cash with profit. Okay? And I tell you, cash, not profit, is a much better reflection of the financial health of a business. Isn't it? Can you pay salaries with profits? You can't. If someone came to you and said, by the way, I'm going to give your salaries for the next 5 years in profits, like, hold on, where's the cash? Okay, how do I pay my expenses, right? You can be cash rich and profit poor. Honestly speaking, I love this. You have a lot of cash, customers pay you advance money, you know, but no profit. That's fine. I can live with that. But what you can't live with for long is when you are cash poor and profit rich, which is what Aldar did. Lots of inflated profits, lots of nice, sexy numbers, but actual cash in the bank, negative. Okay? Very important. And all of us need to breathe and eat food. So I like to compare it very simply, right? Cash is like air. You need to have cash every second of your business. Profit is like food. Okay, we get into Ramadan, fasting season coming up. People survive for days, or hours rather, not days, sorry, without food. Okay? You can see yogis in Himalayan mountains surviving for weeks and years without food. You can't survive without air. Cash is air. Okay? And that's pretty much the presentation, I think. But hold on, I've got more time. So what do we talk about? When I was a child, no, sorry, let's go there. So no, the point I'm trying to make is, yes, cash is important, profit is also important. So how do you manage this? How do you manage your cash? Yeah? Aditya talked about it. Talal Tukan, who's going to come up after me, see, I'm actually giving you a heads up, Talal. I'm building you up for now, yeah, superstar, yeah? Talal is going to talk about working capital management. I'm going to touch briefly on working capital management, just briefly. I don't want to steal your thunder, Talal, yeah? Because how do you make your cash? Well, there are three elements. Your inventory is basically what you buy and hold before you sell it. You don't want to get stuck with slow-moving inventory. Do we agree on that? Yes? Yeah? You don't want that. Make sure you have fast-moving inventory. Make sure you don't invest all your cash in precious inventory lying in your warehouse, earning you zilch, for which you have taken a bank loan and you're paying through your nose. By the way, do you know how much banks charge for SME loans in the UAE? So bankers sitting out here, so I should be very careful what I say, okay? Yeah, Tash, I can see you. How much do bankers charge for SME loans? A lot, I know, but how much is a lot? Sorry? Yeah, 26%, thank you. 26%, going up to 32%. Okay, I don't know who can afford it, unless you're in some very illegal business, which I don't want to know about, you can't afford this stuff, okay? So, inventory, optimize it. I don't say minimize, I use the word optimize, by the way. Optimize means balance it. Why? Because if you have too little inventory, stock out. Customers come to you, you can't sell. You have too much inventory, your money is lying idle, not earning you anything. That's the first one. The first element of working capital management, inventory. Second is your receivables. What's receivables? Aditya made a very good point, right? People try to get money early from customers and to get credit from suppliers. It's not a very feasible model, is it? So you have to sell for credit, okay? There's money lying in the market, not paid to you. So why does it happen? So how do you reduce that? Well, reduce credit period. Do aging analysis, okay? But interestingly, I was doing a conversation with one of my friends who is an SME entrepreneur. You know the number one reason why money is not collected from your customers on time? Can you imagine? Sorry? Not following up is up there, but the other reason, the top reason, is absurd. Thank you, forgot to invoice. Have you forgotten to invoice by any chance? No. Forgot to invoice. It's as simple as that. It's not high tech. You deliver the service, the customer loved it, but you simply forgot to invoice. Is the customer going to call you up and say, by the way, I forgot to pay you, I want to pay you now, you know? Not in Dubai, by the way, yeah, at least, yeah. They park their car in Dubai airport and they're gone. Used to be, okay? So that's one issue here, receivables, okay? The third one is payables, okay? How many times have you told your supplier, the check is in the post, I will transfer it to you after Ramadan, inshallah, okay? Or after my marriage anniversary, or after my divorce anniversary, or after my grandmother's funeral. Whatever it is, you always keep delaying payables. Don't delay too much, because then you have a problem with supplier. But make sure you take advantage of the credit period from supplier. Yeah? That's the whole thing here, yeah? So, optimize. The keyword is not reduce. The keyword is not maximize. It is optimize. Optimize what? Well, optimize the 3 or 4 elements of working capital, which, again, Talal will talk about later. First is inventory. Make sure you optimize this. Receivables, don't have too much outstanding from the market. Payables, make sure you take advantage of credit from suppliers, and have some cash to manage your expenses. Yeah? I did some research. Did you know, for example, that 2/3 of business, this is from the US, by the way, I'm sure it's probably valid in the Middle East and GCC as well. 2/3 of business survive 2 years in business. Half of all businesses survive 5 years. 1/3 will survive 10 years. Okay? I'm hoping that there's a much bigger survival rate over here, thanks to SME Advisor and Gina, but let's see. We should do a survey after a few years, yeah? And see how it goes. Yeah? But you know why this happens? One major reason why this, what you call, survival of the fittest happens, why people just disappear, is because of cash. 82% of businesses fail because of cash flow problems. You don't get enough cash in hand, you give too much credit to customers, you pay in advance suppliers, you're just not making enough cash. Okay? Right? So what's the end piece? You know? Gina said, you know what? Leave the speech or presentation with 3 things that will stick in their minds. Because they will forget you. You're not interesting at all, Binod. You're not. Let's face it. You're old, you're bald, you're not sexy. So just leave them with something that really hits them, and they'll never forget you for the rest of their life, or the rest of the day. Let's put it this way. Yeah. So 3 things. So Einstein had this equation, E is equal to mc squared, blah, blah, blah. I have my 3 equations. Okay? Honestly, it's not mine. I ripped it off. Okay? But it's my adaptation. Okay? So I say, you know what? Revenue is vanity. What's vanity? When Gina goes to people and says, I'm from SME Advisor, first thing is, how big are you? She doesn't mention employees. She doesn't mention profit. She'll mention what? Revenue. That's your size, right? Size matters. So it's all about revenue. 1 billion, 2 billion, 5 billion. But revenue can be faked. You can have fake invoices, fake customers. I can tell lots of stories of how companies fake revenue, right? I used to be an accountant, auditor in my previous life. I know all about the tricks of the trade, okay? So it can be faked, but that's not cash. That's not cash either. It's just revenue. It's the top line, okay? So what's more important than revenue, you think? Any ideas? What's more important? Profit? Don't you need to make a profit? Yes, you need to make a profit. So revenue minus expense is profit. So I say profit is, well, you know what? It's sanity. It's more sensible than revenues, right? Because revenue, you can have 5 billion of revenue, you spend a lot of money, you make a loss. What's the point of running the business? You might as well shut it down and go hiking or skiing or whatever you want to do. So it must be you must have revenue, and you must be profitable, isn't it? But you know what? I like to quote have you watched the movie Wall Street? I'm sure everyone has. Not the 2010 version, the 1987 version. I'm that old, by the way. Don't ask me my age, but I'm that old. 1987, Michael Douglas, Gordon Gekko. Remember? He used the word greed. I won't use the word greed here. Wrong time, wrong place. I'm going to substitute that with cash. Okay? He said what? Cash is good. Actually, I would say cash is great. Cash is great. Cash is right. Cash works. Cash, to me, captures the essence of the performance of a business. Okay? Cash cuts through, cash clarifies. And cash, ladies and gentlemen, is what's going to save and grow your business. In other words, cash is reality. Thank you very much.